It's a decisive mandate for the Modi government as they have swept Uttar Pradesh and are set to form governments in 2 out of the other 5 states that have gone to the polls as well. Of course, the rout coming in Punjab, Goa remains a factor to watch out for, but clearly, Navneet, a decisive mandate coming in for Uttar Pradesh, and this is what the market was also betting on. So the market has bet it right this time. Exit polls have got it right, but no one predicted the mandate of this victory, really.
I'll differ a bit. I don't think the exit polls got it that right, because it's a landslide victory for BJP. Nobody anticipated that they will actually get almost 80% of the total seats, which there were 403 seats, and as of now we are getting the numbers almost there. 315 seats are with BJP, and the market was factoring in either BJP would win or it could be a hung assembly. I'm sure they did not factor in such a landslide victory for BJP, and this is going to continue that momentum which we were seeing for markets. So definitely all the market experts right now are saying there could be a gap up opening on Tuesday when the market opens, but what next from there on, because this is something which the markets were waiting. In fact, the FIs who have not been buying into our markets so much, it will give them little bit of comfort and that cushion coming in, because it was considered as a semi-final for BJP upcoming 2019 Lok Sabha elections, which will be in focus, and maybe the policy making becomes easier because they could get more number of seats going ahead in Rajya Sabha. GST is almost on its way. It could be implemented there, but what about the land reforms? A whole host of other reforms which BJP government has been talking, and this could just make policy making easier for them.
So what are the factors at play over here? 2% away from fresh record highs, less than 200 points for the Nifty, and that could be scaled on Tuesday morning itself. This is what we are going to put to our guests. About a 1,000-point rally has already come in. So even if there is a new high on cards, is this rally sustainable? Do the fundamentals sustain the up move? It's been led by banking stocks. Of course, they've been in top form, over 3,000-point rally on the bank Nifty, but the concerns remain, and the BJP promising a farm loan waiver in Uttar Pradesh. How significant could that be for already stressed banks? Maximum contribution coming in from HDFC Twins as well as ITC and RIL. Are they the stocks to watch out for, or could there be more churn in the markets? Those are some of the domestic cues that we're watching out for, but there could be global factors at play here as well.
Well, clearly, Deep, after the domestic event is done with, there will be global factors. In fact, on the March 13th and 14th, you'll have the US Fed meeting where the markets have actually priced in that there could be a rate hike. But this is what Janet Yellen has indicated. And you also had the jobs data, the non-farm payroll data, which was pretty much good. So you can expect a rate hike to come. But what will this rate hike mean for our markets? It could just mean that the fund flows could move from emerging markets to developed markets, because they are the more trusted markets when you talk about the developed markets like US. The other reasons also could be the next thing to watch out for our markets could be monsoon. It could be the Q4 earnings. Mind you, a lot of the analysts are of the view that the demonetization impact will be lasted in the Q4 earnings as well. And GST implementation, so far it is on the way, but if it is implemented, it'll give a big boost going forward to corporate India as well. Maybe in near term it could be a bit inflationary, but overall a consensus view for GST remains very positive, Deep.
Right, but the big question that we're tracking is a gap up opening on cards. Are we heading to new highs on Tuesday itself, and is this going to sustain? Power Pack panel for you: R. Shankar, Anand Tandon, Mayuresh Joshi, as well as Jay Bala. All of them are with us. Jay, I want to come to you first. Are we looking at a gap up opening on Tuesday? Are new highs on cards on Tuesday itself? And really, what are the key levels that you're watching out for?
Good afternoon. See, we've been talking about record highs for the markets right from the time the markets went below 7,900, and this has been coming for a long time. And right now, at this point of time, things are looking in such a fashion that the projection that I made back in 2016 of 9,660 could be looking a bit conservative. At that point, it was too aggressive. Now that's how the market plays. And whether the market opens gap up on Tuesday or whether it doesn't is immaterial. We don't care about the short-term wiggle. What we care about is the longer-term trend. And longer-term trend is quite strong, and the markets are getting overbought, which is a good sign when it comes to a bullish phase. The market should get overbought, and that's exactly what is happening. And we've seen broader participation. We've seen the small cap and mid cap outperform the large caps. So that is an indication of a very large participation in the market. So things are just moving according to plan. And we could see short-term blips, something like an extreme short-term correction, but that's not going to impact the longer-term trend of market scaling record highs.
All right, that short-term correction could just be profit booking because, mind you, we've rallied over 1,000 points since those December 26 lows. Let me get a fundamental view here. Sri Shankar, last time when I met you in your dealing room, I was there to check whether the Nifty will touch 9,000. I'm not going to ask you that question again because it's quite certain there could be a gap up opening on Tuesday, and well, we will be crossing that 9,000 levels, and you never know if we can cross record levels also of 9,118. My question to you is, are the valuations at current levels looking stretched to you, and where will the next leg of growth come for the markets?
Navneet, we have to bear in mind that this is the election results have thrown up something which the markets have not anticipated. It markets expected BJP to be the major player in UP. They never expected from all the indications that you're going to be having such a big mandate. This mandates actually create some of the equations will change. Look at the numbers in Rajya Sabha. BJP will be able to move some bills which they have been struggling to move. All these things will get played out. It will not get played out over a day. It will get played out over a period of time. Now, earnings is always back-ended. You need to actually see the initiatives getting done. So my thought process initially is going to be market will open gap up. Market will probably cross the previous peak, and there will be corrections after a period of time, maybe around 9,300, 9,400. I'm definitely expecting corrections because earnings is still struggling to catch up. So here, if you look at it, the earnings point of time, in our own estimates for FIS 17 itself, a 17.6% earnings in banking, and also 36% earnings growth in banking for FY18. If you continue to see write-offs, the problems, resolutions not happening on the banking NPA side, these numbers to happen, it's difficult. Now, what will happen is the market will look expensive at that point of time. For my mind, at least for some time, it will be not the valuations which will be driving. It will be the strong performance on the political side, plus what we expect the BJP to do, more pro infrastructure which will help poor, and a lot of pro poor. When I say pro poor, subsidies, like direct transfer, we should go to the right kind of people and not leakage of subsidies, and everything should happen. So I think my expectation is clearly from that angle. Earnings will be back-ended. Valuations will be topping up. I think market, when it opens up, it goes to 9,400. You are actually at a 10-year average of the highest of the market already.
Lots of interesting points that you've thrown up there, Shri, and we'll take all of them individually. Let me also welcome in Mayuresh Joshi of Angel Broking right now. Mayuresh, which camp are you in? Are new highs on cards on Tuesday itself? Is that a given? And more importantly, as Shri was also saying, is this rally only going to sustain, and are we going to grow from strength to strength, considering that it's already been over 1,000-point rally within the last 2 months?
Afternoon. So clearly I think there are three aspects in addition to what Sri Shankar had just mentioned, which I fully agree upon. Largely on the political landscape, the kind of majority that BJP has come out with, I think it's a clear mandate in terms of carrying out the numbers in Rajya Sabha over the next few quarters. And again, that gives a huge leeway for Bharatiya Janata Party to probably pursue its economic policies and agenda on a fast-track reform process measure, as we call it. Secondly, I think if you talk about the economic landscape of the entire issue, I think the repercussions are going to be extremely positive because we've gone through the demonetization phase, we've gone through the remonetization phase. And yes, there might be some amount of a hit as far as the GDP numbers are concerned. The money supply probably constrained, which had seen a lot of volume degrowing, value degrowing for consumer-facing industries, whether they be two-wheelers, whether they be consumer staples, FMCG. But I think the demand and volume growth is picking up and coming back. Third, again, I think the international landscape, at this point of time, most market participants believe with the accommodative stance that ECB has carried forward, that policies will probably still carry forward in the sense of still being accommodative for the Eurozone as a region. And even if the Fed hikes and carries on a couple of hikes going forward as well, I think the kind of dollar rally that we are probably anticipating, I think the flows probably will again start coming back to India in spite of a short-term blip that we might probably see towards dollar assets. So I think it's one of the best economies placed from a political landscape. The economic landscape looks extremely promising in terms of GST getting implemented in the next few months, and a smooth rollout and transition is what the government is trying to probably implement, and that again will have a huge amount of saying in terms of earnings. Third, I think the kind of resolutions that are going on internally, specifically with the banking sector and resolution of NPAs, my own sense is that the credit growth which has been languishing will start picking up meaningfully in the second half of FY18, and that probably gives an impetus to the capex cycle on the private side, which will have a leg up to the rally. So again, markets at the current juncture, probably in lieu of earnings for FY17, looks fairly priced, but yet I think there's definitely going to be a gap up with the kind of numbers that we've seen on the political landscape. And secondly, I think the earnings recovery, in my opinion, as I've always stated, should start happening from the first half of FY18, with the capex recovery in the second half of FY18. And I think it's a matter of time as these numbers start coming through that the markets will re-rate themselves. So again, new highs on the cards. I remain extremely optimistic and positive on the Indian equity markets.
Deep, I think we're almost certain that we will get to see new highs in the near future. It could be in the next 3 to 4 trading sessions, or it could be later than that. But the next question is what from here on after we touch these record highs? Sri Shankar, I would like to come to you. You touched upon that topic of NPAs, which remains a big concern. In fact, you could call it, NPAs, they've actually been increasing in the past 2 to 3 years. And on the other side, the government is also talking about farm loan waiver. I want to get your view on the banking space on the whole, because last time when we were chatting, you were bullish on a couple of banks. So do you think the next leg of growth could not be from the banks? Because the 1,000-point rally, there was a huge contribution from a lot of banking stocks.
Navneet, let's look into the banks per se. Which are the banks which have been participating in this great rally? Let's look at over a period of 12 to 24 months, you still find HDFC Bank there, IndusInd Bank there, Kotak there, Yes Bank there, among a lot of these banks. Axis and ICICI have their own problems, their own watch list of companies, and the issues continues to happen. So PSU banks in general have not participated in this rally. They participated in the rally only in a small part, when be it Bank of India, Bank of Baroda, and you name any one of these PSU banks, except State Bank of India. State Bank of India still has got the kind of pre-provisioning operating profits it generates, is able to provide, even if you want to provide 100% provisioning for the NPAs that they create in 1 year, they can. But that's not the case with many of the others which is in the system. So there is genuinely a problem. And once this farm loan waiver, I don't want to get into it right now, how that is going to happen and when it will happen, I have no idea at this stage. But in general, once you speak about an earnings growth for the system, for the banks per se, finding a resolution for a lot of these NPAs, CDR and S4A accounts is paramount. I don't think that's going to be easy. And my interaction with a lot of these bankers and the channel checks that we have been doing clearly indicates that while there could be resolutions in a few cases, in many other cases there is absolutely no resolution. And even if resolution comes in, or there is a solution which is they are finding out, the problems are the haircut that banks need to take is also quite huge. So I would assume that a lot of 40 to 50% of these NPAs are in many cases are write-off. So once you see the provisioning coverage ratios of the banks go up to somewhere around 65%, etc., that's where I think we can at least come back and say you are going to have a situation which is going to be more normal. Till the time it reaches those levels, I think the problems will continue to be there.
Problems will continue to be there. Jay, I want to get your call on the banking.
What we are assuming is that you are going to see...
Go ahead, Shri. Go ahead.
What we are saying is that what we are also assuming in the last 2-3 quarters, most of the PSU banks which have seen a large amount of NPAs, the NPA addition has slowed down. There has been a deceleration, and what we have also seeing is that the upgradation stroke recoveries are more or less matching up with the fresh slippages that we have been seeing. So if that's a very good indication, if that continues, then I think I can see still a light at the end of the tunnel. Otherwise, I still do not have an answer to those things.
So that remains a big point to talk about. Jai Bala, fact of the matter is 14% rally on the bank nifty in 2017 itself. Is this sustainable going forward from here? Is the optimism sustainable on this one? And clearly we had that touch and go moment with 21,000 as well. What are the levels that one should be watching out for, not just in the short term, because that euphoria will probably drive it up, but going forward as well, what are the levels that one should be watching out for?
Yeah, if you recall from our conversation in November and much earlier in 2016, I have been saying that this rally to record highs will be led by the banking sector. And that's exactly what has happened. And we already seen the bank nifty hit record highs. So we spoke about levels of 23,000 for the bank nifty is what the market is looking at when the nifty scales record highs. But going by the current momentum and the price action that we are seeing for the last couple of months, I think that target is going to be a bit too conservative than we had anticipated. But what's going to happen in the short term is that the banking index is facing resistance at 21,400 to 22,000. That's an important level. I think what's probably going to happen, we're going to see the leaders change within the banking sector. We saw Yes Bank and IndusInd lead the sector. But now I think the leadership is going to come from Axis Bank and SBI and other stocks which haven't led the index that much. So, but in the short term, I don't think it's going to be a straight switch from one stock in the sector to another. We're going to see a bit of breather come through in the short term because there is a short-term stretch within the sector. I think this sector will take a slight backseat in the short term. We're going to see other bigger players like Reliance or Coal India take lead at this point of time. And then once again, after the market takes a breather, we're going to see the banking sector take lead. And the important levels to watch for is 22,000 to 23,000. Once that's taken, there's nothing to stop the index scaling from 27,000.
All right, so that's the long-term view coming in on Bank Nifty of 27,000, but the near-term, which Jai Bala has indicated, that's between 22 to 23%. And Reliance, as he mentioned, has been a clear leader in the rally which we've seen in Nifty in the past few trading sessions. That stock has moved a lot, in fact, in last 1 month also. Mayuresh, I want to come to you and talk about the UP-based sugar mills. We've seen all these stocks buzzing, in the past few trading sessions from the likes of Dhampur, Mawana, Aund, you name it, all the stocks, Balrampur, Bajaj, Hindustan, they've been up on YTD as well as a one-year basis as well. And BJP clearly in its manifesto had indicated that they've promised to clear all the pending dues of growers within 120 days. What is your outlook on the sector and what kind of returns do you expect that the sector can give going ahead? Also tell us if you have any favorites among these UP-based sugar stocks.
No, so largely I think if one really goes by the mandate that BJP had given out, and if they start implementing that mandate, I think the euphoric view that these stocks had already taken and cognizant of what might happen, I think the stocks have reacted quite substantially. Secondly, I think let's understand the dynamics, Navneet, at this point of time. As per these my estimates, the production numbers are going to be extremely low, as the earlier estimates were relatively bit higher. Compare that to the opening stock that these sugar mills have carried from the previous sugar year of almost 7.5 million tons. And if you keep a consistent demand of almost 24 odd million tons coming through, you're going to have some amount of shortage as far as the supply goes, specifically for this year. And again, I think the prices have had a runaway rally when it comes to the retail sugar prices. Now, the government is cognizant of the fact that they cannot allow these prices to run away in a fashion that it already has. So largely, again, I think what kind of moves the government does, in terms of the payouts that the government is talking about, and second, in terms of probably importing more sugar at this point of time, because one really needs to understand the kind of raw sugar pricing that is happening in terms of cents on the international bourses as well, the kind of production numbers that Brazil will come out for this sugar season as well. So largely again, I think the run-up has been substantial. Sugar stocks move in a cycle of a 2-year on-off cycle. I think it's the on cycle for the sugar industry at this point of time, because all dynamics are probably pointing out that everything is in favor at this point of time. So largely again, I think the positive momentum might continue for a whole host of these sugar stocks. But till what periodicities will this momentum last? I think really doubt that. But yes, at least from a medium-term perspective, I think if you assume all these measures to take place, I think UP-based sugar mills, whether that be Balrampur, Bajaj, I think the run-up can still continue on a positive note, as well as the other sugar companies running out of Maharashtra and Karnataka, because that is where the deficit is expected to come through as well. So I think sugar companies running out of Maharashtra, Karnataka can also benefit from a medium-term perspective.
Mayuresh, Shri, Jay, just hold your thoughts there. We've got a great discussion going. We're going to take this forward over the next 1 hour as well. Let's take a very short break, come back. Also want to talk about reform agenda and how markets are going to react to that going forward from here. We'll be back in 2 minutes.
Back, we're still watching our special coverage today, and well, we are discussing the historic mandate which the BJP has received from UP and Deep. I was just reading a couple of numbers. It says it's the best mandate that the UP state has received almost in the last 32 years, and we've seen a lot of hung assemblies there, true. But this time around there was an expectation, but clearly it's been a landslide victory which we will get to see how the market rejoices once it opens on Tuesday. Let's go back to our guest. We were discussing markets with them. Bala, I want to come to you and talk about the FI setup. I was just looking at the data, the Friday data. There was a lot of call writing which happened. Clearly, you know, traders were being really cautious. The turnover was pretty much less. Last full week was, lackluster trading, which we got to witness. So what kind of FI setup are you seeing, and do you expect the flows to go higher from these levels? Because the picture is clear now that the BJP will be ruling in UP.
So we don't care much about FII flows. It's the market structure which dictates the FII flows. You know, if you look at, we touched upon Reliance very briefly. You know, Reliance has been very heavily underallocated by fund managers. So now that the Reliance is picking up steam, once the market pushes the prices much above 1350, 1400, you'll get even more panic from the underallocated fund managers because they'll be under pressure to perform at least in line with the market, if not underperform. So you'll get automatic flows coming because of these. So we don't pay that much attention to what is the FI allocation is. They are also humans like us. They also have fear and greed just like us. So they also make mistakes. So in my opinion, I don't give too much credence to what is the allocation. It's the market's forces which dictate the allocation.
Fair point. Jay, Shri, let me bring you in at this point and talk about the reform agenda that markets want next. So whether you read this as a referendum on demonetization or the economic experiments of the Modi government or just popular support that's gone with the Modi wave, fact remains that what happens next. So GST from July 1 is almost a certainty at this point unless something goes majorly wrong. What next? What is it next that the markets want to see in terms of the reform agenda from the government that will really drive the optimism further? Would it be land reforms? Would it be something related to governance? Would it be the labor reforms that have been stuck for a while now? Even something like the APMC reform that's stuck at the state level. Where next really is markets watching out for on the reform agenda that could really drive fundamentals?
Okay, let's look into these factors one by one. First, why is that mandate coming in a bigger manner? So I wouldn't, at the moment I have very scanty information like the number of how many seats that they are winning in. But a simple look of it actually tells me that large number of people have voted effectively and vote share has gone up quite dramatically. Now it's bring to the point, I do not expect any big bang reform which will have anything to do negatively towards poor. So nothing will affect poor will happen. So I don't expect to see big bang reforms. Even demonetization, it was not aimed at poor. It was probably more aimed at probably trying to get the tax governance better, or catch hold of a lot of these people kind of scenario. So now I would expect infrastructure and rural investment, rural development, which was a theme of the 2017-18 budget, and I think that will continue. Once that continues, the poor should actually need to have the benefit. Whatever has been the subsidies and everything which has been going on to the poor, I don't think it will get removed, but the leakages probably will get reduced, and probably governance on those leakages reduction, it will be getting more and more momentum. And to me, big bang reforms which the industrialist wants may not happen, because the question here is, I'm not in the camp who thinks that today if you start doing a large amount of favor for the industry will do capex. No, I don't think that will happen, basically because the world growth has actually slowed down and there is enough capacities around in the world, and you are actually seeing today the kind of growth or capacity utilization of the entire Indian industry is low. Unless the capacity utilization of the Indian industry increases quite a lot, I don't think you will actually start to see a lot of capex in the especially from the private sector. So to me, the big call is you will continue to see the policy initiatives, bills that we want to get done. Pro-poor policies will continue. The rural development and infrastructure development, that policies will continue. These are all the things which I think will happen.
Fair point, Sri Shankar, because we all know that the private spending so far has not been so much what we were actually looking at. It's been on the lower side, and with such a big mandate, it could just embolden the Prime Minister or the BJP government to continue with their reforms, what they have been trying. And let's not forget, as you mentioned, it could be little populist going ahead, because we're also eyeing the 2019 Lok Sabha elections from here on. Let me also bring in Anand Tandon, who's a market expert, into this conversation. Anand, well, we were discussing with our guest about how, we're expecting Nifty to touch 9,000. It could just be record levels as well. Tell us, from these levels, wherever the gap up opening happens, what would you advise? Profit booking, or you will advise the retail investors who don't have exposure in the markets as of now? Can they look to enter these levels now?
Well, I think if anyone doesn't have exposure to the market, he should first of all get some exposure. And the level is really immaterial, because you're not looking at equity as having a finite duration. So you have to, as an asset allocation, be in equities at any point of time is good enough, because you should be looking at it with a 5 to 10 year view. Now that said, will the index in the next 3 months be higher than where it will be, or let's say by the end of this of the coming week? I would argue that unless there is serious continuation of momentum, the fundamentals don't justify that.
The fundamentals don't justify that. But Anand, how do you see markets really taking the victory and the Modi wave in their stride? So maybe the fundamentals don't justify that right now, but clearly there is a sense of optimism on the street. There has been over the last couple of months as well. Do you feel then that the markets have already priced in a performance like this from the BJP, and that going forward from here, it will really be the factors such as earnings and probably some global cues that will drive market action forward, and not the political cheer that has been one of the driving forces?
So let me try and make a distinction between markets tend to confuse too many things together. There is now some amount of political stability visible, not only for the next couple of years, maybe for the next 4 or 5 years as well, which is good news. There is also a government which has thus far not shown a tendency to be very usurious in terms of taking money off the table, which is also good news. And therefore, you could expect that governance hopefully will continue to remain reasonably well delivered, as opposed to what we saw in the 10 years preceding. However, the economic policies of the present government should not leave any capitalist under any doubt that it is not pro-capitalist. We are looking at a government which has figured out that the way to the people's hearts and to votes is to make sure that you focus on the poor and not necessarily worry about what economists or market specialists think. And therefore, most of the policies are aimed at increasing taxes, at centralizing the decision making. I have not seen, since liberalization started, any government or any market where most of the themes that you can think of are focused around what the government is doing. That doesn't tell you that it's a very capitalistic kind of economy, and I don't expect that to change. Consequently, from an economic point of view, I think the growth trajectory will remain disappointing as it has so far. The government has no policy right now, visible or otherwise, other than spending their own money, and that is going to have a very limited impact. Earnings are already being factored in yet again by optimistic analysts at between 15 to 20% growth, after which the market is trading at 18 to 20 times 1 year forward earnings without even bothering about current year's earnings, which is still not yet done. So net, and there will be a disruption in the economy in terms of further tax increase and further inflation with the implementation on GST. I do not see any reason to be very cheerful about the outcome of the market over the next 12 months.
Right, Anand. Well, the valuations have been stretched, and that's a big concern which most of the analysts have been highlighting. As you mentioned, we're trading at 18 to 19 times 1 year forward earnings, and that's only on back of easy money actually which has come into the markets. Because if you look at the rally which we've had in the past, it's not India-specific rally, mind you. It is a global rally which was driven only because of liquidity. So the fundamentals need to be in place, and the prime thing for that would be the corporate earnings, which need to improve. And let's see how they pan out in the coming quarters. But let's chat sector specific then. Mayuresh, I would like to talk to you. What's going to be the outlook on the capital goods space? Do you think BJP coming into power in UP, the Ganga project has been pending for long. Do you see any pickup in that? And we've seen a lot of stocks doing well once that project was announced in 2014, from the likes of Praj to Thermax to ITD Cementation. What is your outlook on this sector?
Generally, I think the capital goods sector has been extremely sluggish, and whatever order flows have probably come through, the order flows have still remained extremely constrained in terms of what margins they are coming with. Secondly, within the entire realm of how the capital goods sector as a piece of the economy moves, I think a whole host needs to be spoken about the various subsets, including infrastructure, roads, power, ports, hydrocarbons, heavy engineering, and you're probably seeing sluggishness happen there, though I think the government has been extremely supportive in the roads and the power sector to probably take it to the interior parts of the country. Third, I think in terms of the expectations, as has been laid out, I think the private capex was expected to improve, but yes, I think there has been a demand-supply mismatch internationally. I think that's played on the local markets as well, and that has clearly reflected in a lot of private entrepreneurs and private corporates probably not pumping in capex. But to a large extent, I think a lot of capex was already done on the private side. So for example, if you look at the cement industry, I think a lot of capex has been done over the last 5 years. You look at the power transformer industry, a lot of capex has been done over the last 5 years, and it has largely remained underutilized, and that's the entire reason of the underutilization or the underperformance of these stocks, because the return on capital employed remains extremely poor. Now the expectation largely is with the government doing the capex that it has planned, specifically on the plant side, and the increase that it has shown in this year's budget, it is surely going to give some amount of impetus for the private capex to start coming in. And as Anand was mentioning, I think because of the political stability environment that has got created in the country, it is an obvious reaction for the private capex to come through. So again, I think the expectations largely are in the second half of FY18, you will see private capex start coming through. And if that probably starts happening, I think the capital goods industry will see a huge amount of intake of orders come through from the government side. And as the private capex starts building up, specifically in terms of utilization levels going up, the return ratios will also improve. So I think I remain optimistic on the markets. As I said, I think capital goods looks like an interesting sector for us, but one really needs to have a stock specific approach within all the subsets that we probably discussed in the capital goods. So roads, power transformers, to a certain extent the EPC guys on the power side. I think these all seem to be very, very interesting to us over the next 15 to 18 months.
Right. In fact, I need to take a break, but as I do that, Jay, I just want to get in your comments. We were talking about capital goods, we are talking about infra. Any plays over there that interest you? We've seen some traction over there, not much, but anything of interest over there, especially in a scenario where interest rates, they're not going to go down significantly, but have been at about 8 to 10 year lows.
Yeah, I agree the sector has been sluggish, but I don't see anything as a market leader out there. We would rather see another low come through and then probably we can see completion of the structure. So once that happens, we're going to have a wait and watch strategy within that sector. So probably, you can, as I said, you can look at something like Coal India, which is helpful in its infrastructure. So which I think is going to be a leader in the market once it crosses 340, 350. I think we're looking at 450 for Coal India. So watch out for that name within the space.
Right, gentlemen, hold your thoughts. Need to take a very short break. I'll come back. I'll talk lots more traction in the mid caps. Is the valuations justified over there? Could there be a case for money moving back into some of the larger cap names? And a lot more sectors to talk about. We'll be back in 2 minutes.